Today, crypto prices pull back from the recent rally. Sylvia Jablonski of Defiance ETFs tells us why she's still, quote, completely bullish on Bitcoin. A new NBC polling shows 1 in 5 Americans have tried crypto. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies are taking a sharp turn lower this afternoon. By 2 Eastern, prices had fallen 3.5% on average. Bitcoin dropped by more than 4% since yesterday. Ether prices fell by 4.5%. Meanwhile, Ripple's XRP plummeted 7%. We'll talk more about the markets soon, but first, the headlines. New polling from NBC News shows that 1 in 5 Americans have used cryptocurrencies. Men between the ages of 18 and 49 were the most likely to use crypto, at a rate of 50%. Importantly, only 19% of people surveyed said they viewed cryptocurrencies positively, while 25% said they had a negative perception of crypto. You can read about the survey in full at cnbc.com/cryptoworld. Next. Today was the deadline for crypto firms to register with the United Kingdom's Financial Conduct Authority, but not anymore. The agency extended the March 31st cutoff for a select group of companies and set up a new temporary registry to let those firms continue operating. The UK wants all crypto companies to register with the FCA under money laundering regulations, but several of those businesses have failed to do so. Others have committed to pulling out of the UK altogether. Like the UK, the European Union is grappling with its own proposed crypto regulations. Lawmakers there are set to vote on a proposal that requires exchanges to hold information regarding people transferring cryptocurrencies. Those lawmakers say it would make it easier to track bad actors and money laundering. Critics are lobbying against the provision, saying it could violate privacy. All right, on to our main story. Despite some losses in recent days, Bitcoin and Ether are poised to end the month in positive territory. But what do investors think of the recent rally? I spoke to Sylvia Jablonski about whether it can last. Yesterday, we saw a bit of a pause after what has been a really nice and welcome rally, I think. What do you make of that pause?
I remain completely bullish on Bitcoin, and I think that the short-term activity is sort of just noise, but it looks as though, in terms of like what we've seen for the last 6 months to a year or so, is that Bitcoin is correlated with risk assets and equity specifically. So I would say that risk and NASDAQ 100 in particular are kind of mirroring the performance of Bitcoin. You get a little more volatility in the actual cryptocurrency itself, but it's investors. When you see the market rallying for a couple of days, you sort of see investors piling back into Bitcoin, and you see it rising, and Ether and some of the other cryptocurrencies as well. And when you see the pullbacks, they seem to be hitting Bitcoin too. So what do I make of it? I think in the short term, it's going to be sideways volatility. It's going to be range bound price action. But longer term, I still expect Bitcoin to be in that 100,000 camp before I expect it to go to zero. So I still think it's kind of a good time to get in.
And in the short term, what happens next? Because we hear a lot about that $50,000 level, that is a key psychological level. Once Bitcoin punches above that, that's going to bring a lot of institutional interest in, and then it's just to the moon from there. Do you agree with that? And what else is there to consider other than, it hits that point and then everyone jumps in?
Yeah, I think look, Bitcoin hit 60,000, right? And then it went straight down, not long after. So we went through that technical 50,000. We went through the next technical 55,000 and even higher than that and pulled back. So I think that, again, we have to think about it as we do the market. So if I think about, what happened with some of the broad-based indices, and again, just using NASDAQ as an example, at one point, we hit that 200-day moving average, and NASDAQ was very much in bear market territory, 20% or more below all-time highs. And Bitcoin, mirrored that. And, here we are, we're getting off of that 200-day average on NASDAQ, and we're getting off of our lows on Bitcoin as well. So I think that, we'll definitely it's a tradable bottom. I think we're going to have these kind of short-term rallies, but I don't think this is it. I think that the market has a little more to weather in terms of range-bound volatility. There's a psychological aspect to the headwinds as well. You have Russia and Ukraine, you have inflation, you have the Fed raising rates, and that just keeps investors, kind of holding onto their cash, which is actually a huge mistake in the end because that locks in losses. But I think once they kind of get past that psychological aspect and we sort of see the fundamentals of the economy and cryptocurrency and Bitcoin, you'll start to see it rally. So I don't think we're going to get that straight shot just yet. I think you'll get some range bound volatility now between 46, 47 and 50,000. And I think, kind of down the road, we'll see that rally up to 100,000.
If you look at a list of coins by market cap, everything that comes after Bitcoin and Ether, how do you read any of that? And let's take number 3, for example, XRP. What, if anything, do the price movements there say about the state of the market?
If you just think about investing, right, and you think about like stability and things you can hold in your portfolio for a long period of time, those things are usually companies that are large cap, well capitalized, strong balance sheets, mass adoption. So Bitcoin is like the S&P 500, Ether is like NASDAQ or mid cap / large cap. So I think those are the two most popular that people probably feel the safest to trade. And then if you go down the road, if you go to like XRP and the different coins that people are looking at, like even Dogecoin, I think some of those things are just taking high levels of risk in hopes that these will become, adopted functional cryptocurrencies. If you look at the top 10, though, I do think that there's a really good argument to make that if Web 3.0 is to exist, Web 3.0 is going to run on the different currencies, different cryptocurrencies. So if you look at the cryptocurrencies that are looking to sort of power that next level of technology, I think you can make an argument for taking some risk and taking a small slice of your crypto allocation, putting it in things like, XRP and Polka and Poly and some of the other players out there.
Talking about Web3, I know we spoke a couple of months ago, and in December, Defiance launched NFTZ. Tell us a little bit about that. It's an ETF for, I guess, metaverse-related assets. Tell us about it, what's in it, and how it's been doing these last couple of months.
Yeah, so NFT is taking the path that cryptocurrency has. So it's getting slaughtered on the market pullbacks, and it's having nice rebounds on the nice tech rebounds. So it's behaving in line with Bitcoin and Ethereum and whatnot. But I think NFTZ and NFTs themselves are much bigger actually than metaverse. So NFTs represent digital asset ownership, right? And I think that they've created this great world where there's a circular economy between the investor and the creator. So I think there's so much use for this. I think it's going to explode. There's this huge element of participation, decentralized finance again, and creativity and partnership with the local artists. But if metaverse takes off, forget it. Then I think the sky's the limit.
How has that fund been doing these last couple of months?
So the fund came out really strong. When we launched the fund, we gathered about 10 million in assets very quickly. And our investor is very much like the young sort of millennial Gen Z retail investor that wants access and wants a piece of NFTs. It's starting to perform again now that the market's kind of, on its tradable bottom here. And you've got names like GameStop in there. They're launching a big NFT marketplace that have kind of pushed it forward. And it's not an ETF that's going to give you like 100%, return in a couple months. It's something that you got to hold for a longer period of time and kind of let it play out as the technology around it builds out.
Before we go, Avichal Garg of crypto VC Electric Capital also gave his take on crypto's performance to CNBC. Here's what he said.
As DeFi and staking and some of these other opportunities start to come online through the exchanges, it creates a yield generation opportunity. And so I think that may actually create some mix shift a little bit. So I think it might move people away a little bit from Bitcoin and moves people towards ETH, where you can generate staking returns and participate in DeFi. And so as these other ecosystems start to generate more yield generation opportunities, I think it'll be interesting to see how the buying patterns change for users.
That's all for today's Crypto World. We'll be back again tomorrow with more.